Hey, what's going on? It's Rob Folia with Folia Properties at Keller Williams Realty here in Nashville. And it is March 15th. It is the Ides of March. And I wanted to do a special video today to basically let you know to beware the Ides of mortgage rates. Beware the Ides of mortgage rates in 2024. Um, the reality is rates have kind of been stable here over the last little bit. Yes, they've gone up, they've gone down a little bit in the last couple of weeks, but they're still in the upper sixes into the low sevens, depending on on the lender and who you talk to and what day you talk to them. I mean, we're going on now a good 3 months where we've been within the range of the mid to high sixes. And we'll see how that continues. We'll see how that continues going into 2024. There are a lot of pundits that will give you their opinion on what rates will do. I will almost never do that because the reality is nobody knows. I don't know what rates are going to do here in the next 12 months, and nobody does, just to be real with y'all. But I want to go over today three traps to avoid as either a homeowner or a home buyer in 2024. So three traps to avoid as a home buyer in 2024 or as a homeowner. And the first trap is about refinancing. And that trap is refinancing your mortgage to either take cash out or to potentially skip payments if you're in a rough financial position. And the reality is, if your rate is in the 3% or the 4%, that is gonna, if you're gonna be in your home for a while, refinancing to a 6 or a 7 or somewhere in that range, that's gonna set your family back long term to refinance from a 3 to a 6 or a 3 to a 7. And I know it might be enticing if you're in a rough financial position, if you feel like you need to skip rates, or if I know there's been downsizing that's happened all over the country right now. And if you're in that type of position, it might be enticing to refinance because you can take cash out if you're equity rich in your home. But the reality is going to a 6.74% rate, just according to Freddie Mac, that's what the weekly average was as of yesterday. Um, if you're a 3% and you're going to that, gosh, that's gonna probably close to double your payment, or at least increase it by like 40%, 50%, somewhere in that range. And point being, you don't want to do that. And so do not fall into that trap of refinancing in 2024. The second trap is believing the market's going to quote unquote get better for you. And what I mean and what I want to show you here is just basically what the market trends have been doing here over the last little bit. Let's just look at a 3-year average, and let's change the calculation type to like a rolling three, so it's not so jagged. And so what I've got pulled up here is just Rutherford County, the average sales price. And yes, there was a little bit of a peak here in 22. I mean, that was beginning of 22 was when the market was at that frenzy, the frenziest pace we'd ever seen. But aside from that, it's been stably going up, as you can see here. I mean, once it kind of came back down to reality, to see the average sales price in February of 23, that bottom after the peak being at 450. I mean, right here we're at 475. I mean, in a year, that's an increase of $25,000. Just doing the quick mental math, that's like 5 to 6% over last year. Um, Point being is there's a lot of people that are out there that I'll talk to, whether it be clients, customers, prospects, economic forecasters, whatever it might be, or even if it's just like a pretend economic forecaster, the person who watches probably too much of their favorite news outlet. They think they know what's going to happen in the market, and the reality is we don't. And, if you look at real estate appreciation historically, and when I say historically, go back like 50 years and look at the averages, you'll see that historically real estate appreciates like 3 to 4% year over year. Now, I know the last 15 to 20 years have been a slight aberration on that. And a big part of that was the recession back in like 2007, 2008, because then that recession was not a typical recession when it comes to real estate. It was driven by mortgages that should never have been written, so that caused homes to foreclose, which caused inventory to get out of whack. Like those mortgages aren't being written anymore. There's no reason for inventory to get out of whack any longer, unless just everybody in the country lost their job or something crazy like that. Or I know a pandemic, and hopefully knock on wood we don't see that again anytime soon. But any type of crazy, weird, random event that no one's expecting, unless something like that happens, there's no reason for the market to get out of whack. And we should consistently see home values go up by a few percent every year. I mean, just looking at rates, you can see last year, this time, let's look. This week, the week ending March 16th of 2023, 6.6, 6.74. I mean, that's stability right there. And the more we have stability in interest rates, the more we're going to see home values just kind of stay appreciating at what historic averages are. And so I just want to encourage you to stop believing that the market's going to get better for you. Meaning, if you're a home buyer and you're waiting on rates to drop, we don't know if that's going to happen. If you're a home buyer and you're waiting for prices to go down, I don't expect that. I really don't. I mean, nobody knows. Again, I mean, and it's all based on supply and demand. Go back and watch some of the old videos if you're not sure what I mean by that. And yet the reality is we don't know what the market's going to do long term, but I doubt we're going to see prices drop anytime soon significantly. So just quit believing that the market's going to, quote, get better for you. And if you want to buy a home and it makes sense financially for you to do so with these interest rates as we're seeing right here and with what prices are, go for it. I'll be here to help. The third trap that I want you to avoid as a home buyer or as a homeowner that might be thinking of moving in 2024 is falling for the rate buy down trick. The rate buy down trick. In fact, I should have pulled up a tab for it. I won't pull it up, but I should have put it up on the screen and what exactly a rate buy down trick is. And what it is that basically a mortgage lender might be at 7%. They might be quoting you 7% for for a mortgage, but they'll tell you that they can do like a 2-1 rate buy down, meaning that, like, for a certain amount of money, or maybe asking the sellers to pay a certain amount of your closing costs, they can lower your interest rate by 2% for 1 year and then 1% the next year, and then it's at whatever your fixed rate's going to be for the life of the loan for the next 28 years for a 30-year fixed mortgage. So it might be 7% now, and then they're buying it down to 5% for a year and 6% for a year to help you get in the home and qualify and to feel good about your payment. The reason why I want to say be careful about that is, let's pull up a mortgage calculator and I want to show you what that does. It does impact what you're paying by a fair amount. Like, let's just say you're buying a $600,000 home, you're putting 10% down, you have a loan amount of 540, your interest rate is, well, here, let's start with, say, a 5% rate. We'll leave PMI on there. We'll leave everything else as it is. Your payment will be 3,000, a little over $3,600, right? That's at a 5% rate. That's the rate, that's the payment that you're qualifying, not qualifying for, but the payment you're starting out your mortgage with. And you're saying, hey, I feel comfortable with this. It's a $3,600 a month payment. It works for me. If rates were to go back to 7% and nothing else changes, you're increasing your payment by a good $700. That's impactful for a household. And so I just want to say, be very, very careful about falling into that rate buy down, that 2-1 rate buy down trap that some lenders, some agents out there are pitching. To me, it doesn't work for most home buyers, most homeowners. It's just kind of a slippery slope for some. And so just want to be cautious of those three traps as we avoid the Ides of mortgage rates here in 2024. Again, be cautious of refinancing your mortgage. Be cautious of believing the market's going to get better for you, and be cautious of falling for that 2-1 rate buy down trap. So as always, if you have a question about your specific scenario, just reach out. I'm here to help anytime. No questions too big or too small. Happy to answer them all. It's Rob Folia, Folia Properties at Keller Williams Realty here in Nashville. We'll talk to you soon. Thanks, y'all.